Looking at the commodity space, we did see on Friday gold really start to see a move higher because of this attempted coup over in Turkey. However, we have subsequently seen a move lower. That being said, I wouldn't necessarily rule it out for now, and it looks like a really interesting market for the day. I'm going to look at it firstly in the daily time frame to give a wider perspective. We can see we've got this trendline resistance, and that has held up. You can see we've got two big red candles coming out of that, and now we're more gradually moving lower. Now, the key thing here is, where is the sort of swing low that you're going to be looking for? The first major swing low that needs to be taken out, and I would say just about, I guess, would be this 1305. Now, the clearer one would be 1250, but for the moment, I'm working with that 1305. Now, if you look on the hourly time frame, this is where it gets interesting, because you can see here that actually we've got this downtrend coming in play, and actually it's clearer on the 4 hour. We can see that we've got this downtrend recently, but crucially, we're creating this falling wedge pattern. That is actually a bullish pattern, and it's come into the 76.4 and seemingly provided support. Since hitting that 76.4, it's not created a new low. Now, given the fact that we've got this bullish pattern and we've got a retracement into the 76.4, I am very happy taking longs around about this area to say that it's not going to break below this 1305 level for a move back towards the top of this pattern. So this is going to be a very interesting one to watch out for. Your next key resistance is around about 1340. An hourly close up above there means you've got trendline resistance broken, and we've got the creation of a new higher high. So that would be a particularly bullish pattern. But I'm looking for this to break higher, and I think this 1322 in particular, if it comes back to it, could be an interesting area to get long for it to not break below this 1305 support level. Finally, I wanted to look at what's happening in terms of US crude. Now, there's a sort of divergence in terms of the price action we're seeing in US crude and Brent at the moment, because we've seen a break towards the upside in terms of Brent and taking out key trendline resistance. We haven't seen that in terms of US crude. So this is holding for the time being. You can see we're turning from overbought. The potential is for us to continue this trend, and that is lower lows coming into play and lower highs. But we've got a question mark around about here where it failed to create that new low despite the rally into trendline resistance. And therefore there's a potential that we could be seeing a continuation pattern of this rally before we see another break higher. The key thing here is we need to see a break up above this 4750 for it to stop looking as bearish as it has been for the past month or so. Looking at the hourly time frame, we can see that actually, if this market was going to turn around, you would think that it would start weakening in a more convincing manner than this at the moment. A lot of indecision candles. Previously, you come up to it and sell off straight away. This one doesn't look that bearish, quite honestly. So whilst the chart looks a bit bearish, I wouldn't necessarily say that it does on a shorter term time frame. And given what we've seen in terms of Brent crude, I think we're probably just as likely to break higher from this symmetrical triangle as we are to break lower. The key thing here is a break up above 4750, which would be required to negate the downtrend of late. So it's a wait and see kind of thing in terms of US crude, but the signs are that we could possibly be seeing a weakening of this downtrend that we've been seeing recently.